Hey folks, CA Rachana Ranade here and I welcome you all to the IPO summary of Vishnu Prakash R Punglia Limited. Well, this is an IPO summary video. So what I'm going to try and do is to summarize just a 550 pager RHP into a video of roughly 10 to 12 minutes. So this is the analogy that I can use is instead of watching the whole one day international match for like what 7-8 hours or more than that maybe, instead of that why not watch the highlights of that match in 10 minutes. So same thing we are going to do here. I hope you enjoy the whole summary. So keep on watching the video till the end. The company is an EPC type of a company. So what is EPC? E stands for engineering, P stands for procurement, and C stands for construction. So what does the company do? In short, I'll tell you. Let's say they get a big project. For that, they'll do a detailed engineering. Once they do the detailed engineering, material which will be required for that project, that will be procured. At the end, the project will be constructed and finally it will be handed over to the party like a turnkey project. Coming back to this company, the company does not only take up EPC projects, but they also take up operations and maintenance related projects. From whom do they get these projects? They get it from the central government, from state government, from autonomous bodies, from private bodies across 9 states and 1 union territory. Now, over a period of years, the company has increased its working capabilities. And how? For that, let us take some example. It was in 2002 when they were awarded a WSP, that is a water supply project for Public Health Engineering Department from Rajasthan, and the amount was 19.8 million rupees. But in 2021, they were awarded a WSP for Public Health Engineering Department from Manipur, and the amount was 4,332.9 million rupees. Well, out of the total revenue that the company has earned, out of that 99.01% revenue has been received from the government and balance less than 1% has been received from the private entities. So I hope you have understood that how big or a big role is played by the government entities for this business. Now let's try and understand how is the business classified, and for that have a look at this chart. You can see that almost 85.39% of the total revenue is contributed from water supply projects, roughly 6.76% from railway projects, 6.2% from road projects, and a balance very small chunk by irrigation networks and other projects, and of course they also have a small others category. As at 15th July 2023, the company had an order book of 37,995.3 million rupees. But then what is this order book? What relevance does it have is what we want to check out in the coming parts of the video. So check on the video till the end. Well, now let's discuss a little bit about the industry analysis. Everyone knows that infrastructure sector is one of the key drivers for the Indian economy. And if India were really to go to the 5 trillion landmark, then infrastructure has to play a very big role. Now, what has government done for that? Government has launched the National Infrastructure Pipeline, NIP, combined with other initiatives, something like Make in India. It could be PLI schemes. It could be Jal Jeevan Mission. All these play an important part in the overall growth of the infrastructure sector. Now, infrastructure is a very broad thing, right? What is this company into? If you remember, I told you that almost 85-86% comes from water supply for this company. So let's discuss a little bit more about the water supply sector, and for that have a look at this chart. Now this chart talks about the market size for the water requirement for different uses. So how much water will be required in coming years is what is displayed in this chart. Now if you see, there are 2 years which have been discussed in the RHP. One is 2025 scenario, one is 2050 scenario. Now if I talk about irrigation, you can see that 611 billion cubic meters is the requirement for water, and which is expected to go to 807 billion cubic meters. Now you can see that different figures are even given for domestic usage, for industrial usage, for power usage, for other usage, and even if you check in totality, the requirement is going to shoot up from 843 billion cubic meters to 1180 billion cubic meters. Now I hope you are understanding that if the requirement of water itself increases, in which areas? It could be irrigation related, it could be domestic related, it could be industries, power, whatever. It is very crucial to supply water at each and every place, and for that this company can play a good role. Now let's talk about the promoters of the company, and we will follow this with the litigations part as well. Now if you can see here on screen, these are the members of the Punglia family who are also the promoters of the company, and these promoters have several decades of pioneering experience in the field of construction of water supply projects, be it water tanks, reservoirs, water treatment plants, sewage treatment plants and whatnot. But this is about mainly related to water related projects. But if you even check about general infrastructure projects, they have an operational understanding with a track record of more than 36 years. Now, if we talk about the litigations, you have to understand that there could be two types of litigations. One is company related, one is directors and promoters related. Now, if I'm talking about the company, there could be again two parts. One is litigation on the company, or it could be litigation by the company. Similarly, if I'm talking about directors and promoters, it could be litigation against the directors and promoters, and it could be litigation by the promoters and directors. But how much are the figures? For that, have a look at this chart. Now, if you see here, in both the cases, be it company or directors and promoters, whatever is the amount which is involved, which is against their company, that is a comparatively smaller amount. You can see in case of company, by the company is 1045 million rupees, but against the company is barely 28.77 million. Directors and promoters, even this number is pretty small, it's just 1.26 million rupees. But what has been given additionally in the RHP is that the company has not incurred any material penalties or fines in the last 3 financial years. But if that happens, if something goes against the company, then it may have an adverse effect on the company in the future. In fact, the RHP also mentions that if certain ruling goes against the company may be debarred from participating in any future tenders which are floated. Now let's go ahead with the financials of the company. I'm going to present you 3 years data along with the CAGR. So if you have a look at this, you can see that the revenue from operations has grown at a CAGR of 33.99%. EBITDA on the other side has grown at a rate which is higher than the revenue from operations, and it has grown at 49.98%. In fact, the net profit has even grown at a higher rate, CAGR, at 68.4%. If you see, ROE has also gone up from 19.4% to 29.94% to 33.72%. But you can see that the cash flow from operating activities has been reducing, and it has gone down from 348 millions to 33 millions negative to 84 millions negative, just rounding off the numbers. But then when I try to check in the prospectus if the company has given any specific reason for that, it is mentioned that since the company is in the growth phase, working capital requirements are high, and that is one of the reasons why the operating activities cash flow has gone negative. Now let's go ahead with the peer comparison and valuation part. If you have seen my previous video, IPO summary on Aeroflex Industries, I had mentioned that there was no peer for that company, no listed peer. That was the reason why I had not taken this part, and because there was no listed peer, I could not even compare the valuation with the industry valuation. So we are going to compare in this video. Why? Because if you have a look at this, it's mentioned in the RHP that Vishnu Prakash R Punglia Limited has listed peers like PNC Infratech, HG Infra Engineering Limited, NCC Limited, Rail Vikas Nigam Limited, and ITD Cementation India Limited. But if you see the total income of Vishnu Prakash R Punglia, it's very less as compared to any of its listed peers. But if you see overall return on net worth, that seems to be highest in comparison with the listed peers that are mentioned in the RHP. NAV on the other side is not at the highest. You can see that the highest is for HG Infra Engineering, which is at 294.9. Now, if you check out the valuation part, industry PE highest comes at 25.62, lowest comes at 12.56. So, industry average comes at 17.22. P, that is the industry P. But if I were to compare it with the PE of this company, the P comes to 9.51. So company P comes to 9.51 and industry P comes to 17.22. Now let's understand few key risks for the company. The very first one is a geographical concentration risk. Now why am I saying this? Because almost 61.54% of the pending order book, that amount comes only from the state of Rajasthan, only from whatever projects are taking place in the state of Rajasthan. So that is called as a geographical concentration risk. Second risk can come from a business segment concentration risk. Now what is that? If you remember, I told you that almost 85-86% of the revenue was generated only from water supply projects. So this is what? This is again a concentration, but this is a business segment concentration. Third one can be like a client concentration. Remember, I told you that almost 99% revenue is generated only from government. So that is what? That is a client concentration risk. And also 80.92% of the revenue has been generated only from top 5 clients. So all these 3 risks that I talked about, the first one was a geographical concentration risk, which was about Rajasthan. Second one is about business concentration risk, which was about water supply projects. Third one is client concentration risk, that was about the government, 99%, and top 5 clients risk. Now there is also one more important risk that they have given, which is about the order book. Now we have to understand this part a little bit in detail. For you all to understand, whenever you are analyzing any whenever you are analyzing any company which takes a long time to actually start the project, to complete the project, to deliver the project, in such type of companies order book is definitely checked. Now higher the order book can be conceived as a better thing for the company. So for that, have a look at this figures where you can see that the order book has gone up from 15,622 million to 38,127 million to 34,884 million. So order book has been kind of rising. I know there's a small dip in 2023 as compared to 22, but if you see sales, they have gone up from 4,857 million to 7,856 million to 11,684 million. Now comes an important ratio, which is order book to sales ratio. Now this ratio has gone up from 3.22 to 4.85 and has then come down to 2.98. Now why am I discussing this entire point? Many people feel that if the order book is of, let us say, XYZ rupees, that will be the guaranteed sale in the coming future, in the immediate next year. That will not happen. Order book will be split up into sales in the coming few years. So you have to understand that you have to calculate order book to sales and then understand that order book is not a guarantee of future revenue. I hope this part is also clear. Now let's go to the last part of the risk, which is about borrowings. Now if you check out certain figures, you will be able to understand this point in a better way. Their long-term borrowings are 602.97 million rupees, whereas their short-term borrowings are 1,900 million rupees. Now why am I talking about this as a risk? The RHP mentions that the business is working capital intensive, involving relatively long implementation period. The majority of financing is short term. Now this point has been mentioned in the RHP. Now what is this all about? You can imagine something like this: long implementation period. Let's take an example of 3 years for an implementation period. So when is the project going to be completed? After 3 years. But they have taken a short term financing for this, which has to be repaid, let's say, within a year. Because as you can see the figures, short-term borrowing is way higher than the long-term borrowings. Now could this lead to a mismatch? What sort of mismatch? They have to pay the liability within a year, let us say, but they may get a major chunk of money from the project, let's say, after 3 years. Now could that lead to a cash crunch? And answer is yes. And that is the reason why the company also mentions in the RHP that a failure to renew the arrangements for existing funding or obtain additional financing on acceptable terms in a timely manner, it could have an adverse impact on any planned capital expenditure, and ultimately it could also impact the revenue of the company. So let's understand about the key points from the IPO details. The IPO opens on 24th August 2023, closes on 28th of August 2023. The listing date is expected at 5th of September 2023. The price is going to be 94 rupees at a lower band to 99 rupees at an upper band. There's going to be an employee discount of 9 rupees and the total issue size is going to be 3 crore 12 lakh shares, aggregating to 308.88 crore rupees. It's 100% fresh issue. Means what? Whatever money the company, whatever money is going to be raised from the IPO, that will be staying with the company. Now let's understand what is the company going to do with this money. The objects of the issue are something like this: 62.18 crores are going to be used for funding the capital expenditure requirements, and 150 crores are going to be used for funding the working capital requirements. Now let me know in the comment section if you can correlate the last point that I discussed in the risks section with the objects of the issue. I want to know your thoughts in the comment section below. This will help me understand whether you understood and whether you are able to correlate these 2 points or not. I hope you enjoyed this video, and there were 3 important points that we understood in this video. We understood the concept of order book, we understood how to interpret that, we understood the concept of EPC, and we also understood the concept of borrowing in detail. If you loved this video, don't forget to share it with your friends, don't forget to smash the like button, and if you want to know more about other financial concepts, you can click here. Till then, take care. Jai Hind and bye-bye.